Welcome everyone. There will be some people that are coming in a bit late, but yeah, thank you for taking time out at kind of just before lunchtime on a Thursday for this session. I will add people as and when, but really pleased to have Matt Hann with us today, who I've had the pleasure of knowing for many years. Again, you're not meant to laugh that hard. It's been a good kind of relationship over the years, many ups and downs. So Matt is here to talk through, I guess, his career journey, to be fair, and more specifically, his role at Festickit in the first CFO role that he's undertaken. So today we're going to do a quick intro, some quick fire rounds. There's lots to cover, so apologies that we will try and do Q&A at the end, but we've had loads of questions that have come in advance. So the questions that have come in advance, and also that I know that people will want to hear, I've tried to kind of get into the quick fire round and the subsequent kind of structured questions, but I'll try and leave Q&A at the end, and obviously feel free to drop any questions you've got into the chat box, and we'll try and organise that. Maybe my friend Dan Wells can help with that towards the end. So without further ado, Matt, do you mind just giving us a quick intro to you?
Yeah, of course. So my name is Matt. I'm the CFO at Festickit. I've got about 15 years worth of experience in investment and finance roles, working with big corporates, but also smaller startups and scale-ups as well. So, I'm sure I'll give you a bit more colour on some of my experience as we run through the questions. So I'll leave it there for now.
Yeah, cool. We will jump straight into the quick fire round. So the answer is important, but the speed of the answer is equally important.
Okay.
Obviously there may be some Wi-Fi lag, but we want gut feel. So here we go. Startup or scale up?
Scale up.
If you could only have two advisors, external advisors, who would you choose?
My auditor and my lawyer.
We'll come on to the lawyer point at another moment, I'm sure. Is that a personal law or business law?
Business law.
Team of 5 or team of 50?
5.
I was expecting you to say 15. What would be your ideal team size?
I'm pretty flexible. I've ran big teams at Channel 4, kind of 25 plus. Team at Festickit's less than 10. So there's advantages and disadvantages to both, I think.
Yeah. Best tip coming into a new role to build a relationship with a CEO?
I think you've got to spend a lot of time together. I think, there's always the great analogy about the CFO and the founder in terms of owning the terrain and the map. And to work that closely and work that in that interlinked way on so many things, you've got to know each other's thought process inside out. You don't necessarily need to like all the same stuff outside of work, but you need to almost be able to predict what each other's going to do in a certain situation. So I think you just got to spend loads of time almost getting their knowledge inside your head and almost train them up a little bit as well about how you want to work and how you think.
Do you both evolve?
Yes, definitely. Yeah.
Best finance system you or your team have used?
But if there's anyone on the call who knows me now, they know I don't have a login to our finance system. So do you know what? I'm gonna cheat a bit. We use a company called Scalability to help engineer all our processes and data flows. And they're not a system, but they help so much with the architecture of our data that has transformed how we work. So I'm gonna cheat and name one of our consultants.
And you're also sponsored by them as well.
Yeah, I've got a banner that's going to appear behind me soon.
Yeah, I love it. Best technologies to automate?
Data again. So at Festickit, we sometimes process about 1 million orders a month in the peak. And if you think about that, it's got all different parts to the basket, all different revenue streams, and there's all different currencies. So for us to be able to reconcile Stripe, the bank, and all that data set is so hard and complex. So for us to automate all of that kind of flows and be able to net off and reconcile has saved us so much time.
Biggest hiring mistake?
Ones where I've known it's not right. My gut's told me there's something missing, but I've gone ahead and made the hire because I've been under time pressure.
Is that at both corporate and startup level?
Yeah, both actually. I think that any hires that I've looked back on and thought that hasn't worked out for whatever reasons, and there's loads of reasons why that can happen. When I look back in the interview process, I've always had a bit of a gut feel that it hasn't been a slam dunk. And I think waiting and being patient and making sure it's the right person for the right situation is really important. And if you don't find that right person for the right situation, hiring someone to plug a gap can end up costing you a lot more later on.
And in a scale up, areas outside of finance obviously fall under the CFO. Is that good? And which areas do you think best fit?
Yeah, so I mean, I lead HR and what we've got of legal currently at Festicket. The good things are it creates alignment. So in terms of like, if you think about scale up going through a really aggressive recruitment plan, I feel like I've got good checks and processes to make sure that we're managing the burn rate, we're investing, and it's aligned with that money in, money out mentality of scaling a proven business model to try and deliver returns to shareholders. So I feel like as a CFO in managing HR, I've got a really good oversight of that hiring process. And I think that's the biggest positive. On the downside, I think that sometimes HR should be challenging finance to not be thinking about the numbers so much and maybe thinking a little bit more about employee development programs and investments into employees. And I think it's really hard as a CFO to have that balance of two hats of supporting someone in your team who reports to you to get investment whilst you're also the person signing it off. So I think that's an area where if you do manage those other functions as a CFO, you've got to make sure that they have their voice.
Yeah, no, I can completely understand that. Best tip for managing a superstar?
Autonomy.
What is the relationship you have with non-financial data in your CFO role currently? Which non-financial data do you want to see, and how do you interact with it?
So I have a dashboard that I can see every day that tells me kind of, it's like the pulse of the company. I think in terms of non-financial data, I think the CFO has to own the overall KPIs for the organization. So I think in terms of like definition of those KPIs, it all has to be linked back through to the business plan, and you have to make sure that that alignment is there. So I think the CFO needs to be absolutely at the heart of the process of setting what are the important KPIs for the business and then helping that cascade through the business. So I think it's really interlinked.
How ready were you on a scale of 1 to 10 for your first CFO role?
In terms of motivation, 10. In terms of
you were 11.
Yeah, maybe 11.
You were 11.
In terms of having every box ticked for the things that I would have to do in that role, maybe a 6 or a 7.
Yeah, okay, wow. Well, I was expecting maybe 7 or 8, but yeah, 6 is that squeaky bum time number, isn't it? You're only just over halfway there, Matt.
Yeah, I mean, there was plenty of things when I first got my first CFO job. There was plenty of things that I hadn't owned before. So I'd never owned an audit. I'd never thought about an international business's tax strategy and tax structure. And all the complexities around transfer pricing and stuff that comes with that. There was plenty of stuff that I hadn't owned, I was aware of, and obviously I'd done in my studies, but I hadn't owned that stuff. So I had to learn that at the same time as delivering a busy job and doing the things that I was hired to do, that I had a bit more track record in doing. So I think 6 or 7 is probably an honest assessment.
How did you learn those bits alongside the core role? I guess the core role was elements that you were more comfortable with that would come from more of a commercial background, but yeah, what was your strategy? Because you went into that. Did you know when you were going into the role you were a 6 or a 7, or did it become more apparent in the first month?
No, I think I was pretty self-aware. I thought about it a lot. I thought about my own personal development a lot. You know me. I've been very fortunate at Channel 4, which I can talk a bit about later, to have a lot of investment into me as a leader, and I think that brings quite a lot of self-reflection. So I think I was well aware. I think the important thing for me was to build a team that compensated, on the one hand, compensated for my weak areas and blind spots, but on the other hand, had the right skill set so I could teach people the things that I felt I was good at, so we could really drive those things through the business. And if you think about my grid, if you like, of strengths and weaknesses, the kind of financial control area is an area I've spent much less in my career. Where I didn't come through the audit route, I came through a business partner route. Whereas, being able to influence business decisions, raise capital, condemn, and they're all my kind of sweet spot. So I made sure that I had a really good FC to work with me on all of the areas that I felt I had less experience in, and built a really good working relationship with them. So I knew the right time to challenge them and ask questions and understand things, but also I gave them autonomy to be able to make decisions and run things that maybe I didn't have as much experience as they did.
In reflection, going into your first CFO role, are there a couple of bits or 3 bits of advice that you think you would tell young Matt?
I'm still young, Andrew.
We're a similar age. I'm 2 years younger, but we're similar age. Not that I've analysed it.
I've got more grey hair. Anyway, there's 40 people on the call.
So 2 to 3. Yeah, kind of looking back.
Yeah. So I can share a tip that my boss at the time, when I was at Channel 4, gave me, and he told me to read a book, which, funny enough, I've got out now, called The First 90 Days. So the first 90 days is a really good framework for preparing yourself before you start a new job, and also having a roadmap and a plan when you start a new job to try and give yourself the best shot at success. And I actually wrote myself up a plan, and I wrote myself up a kind of before 90 days and a list of different things that were relevant. And when I started, I sat down with the founders and agreed a 90-day plan with them as well. So we're all aligned on what success looked like. We were aligned on what was expected from each other. And I think that really helps. It sort of starts you off on that front foot to tee you up. So I'd say that was number 1. Number 2, do your research. So I think it's great everyone here is part of a network, which is brilliant. And I'd say really leverage your networks before you start new jobs and speak to people who've been there and done it. So I actually interviewed or bought coffees or lunches about 6 or 7 CFOs who'd just been through kind of a 20 million plus raise. And that's what we were trying to achieve at Festickit. So I kind of had a good blueprint from lots of people I trusted around what things might look like in 18 months' time for Festickit, but also what problems typically occur. So I felt like I was going in with a good plan, good preparation, and insight around what to expect as the business changed over the next 18 months.
Yeah, that's really good. I think that's a great snapshot. We're going to jump into the more structured questions, but we've had a question from Emmett as well. When considering taking on a risky but promising scale up with somewhat lumpy revenues, sounds familiar, what are the key things you look into before deciding whether to join?
Yeah, so look, it's a big decision for everyone, I think. And look, different situations, I think, dictate a different level of decision process. So how can I put this? So for me, when I was trying to break through into my first CFO role, I felt most of the calls I were getting from recruiters at the time, this is definitely not directed at you, Andrew. Most of the calls I was getting from recruiters were for other heads of commercial finance roles, or maybe a divisional FD role. And that wasn't what I wanted to do. I wanted to go and be a CFO. So I think for me, it depends on what you want and it depends where you are. But I needed to break through. So when I got the opportunity to join InvestTicket, I of course did my due diligence, but I knew that even if the business wasn't hugely successful, I knew the things I would learn in just doing that first role meant that all my due diligence, in a way, was a sense check that I wasn't walking into a situation that was awful. And actually the benefits were going to be there for me, even if it wasn't a roaring success. Now, I think it's different. So now I look at opportunities like I'm an investor. So everyone's going to think I'm a total process geek after this, but I actually have like a 5-box theory on investments. And I work through those 5 boxes when I'm looking at opportunities to really assess and appraise whether it's a company that I'd like to go and spend the next period of my life working for, and whether I think it's a good investment of my time.
You've got to tell us what the 5 boxes are now.
Yeah, okay. So this is going to test me. So market size.
Yeah.
Team.
Yeah.
The business model.
Yeah.
In terms of like unit economics, and have they got that engine to scale? The growth. So growth rates and capital efficiency. Yeah.
Yeah, that's cool. I can do.
Cool. And then the 5th one is strategy. So the point of differentiation. So have they got a nice moat? Are they defensible? Have they got unique assets that are hard to replicate?
Barriers to entry type.
Yeah.
And is this before you've even, because obviously you've turned down many CFO roles I've put your way. So is this before you've even met the CEO that these are the 5 boxes?
No. So I think that's a really interesting question. So this is later, right? This is at the point where, I wouldn't do all that work before I know whether I can get on with the CEO, whether I've had a look at the business and it's just a model that I'm interested in. So I would say that's more like an interview type stage, when you've got to that point that it becomes a bit more serious and it's worth investing that work in. I think if you rewind and think about opportunities, I write stuff down that I'd like out of the next role. So, there might be 5 or 6 characteristics that I particularly enjoy. And I would use that as a bit of a framework for discussions that I would like to enter into or not. Because I think there's always so many jobs that it's got to be the right fit and one you're interested in. So for me, for example, I answered scale up instead of startup pretty quickly, because I like businesses that are going through that stage. So slightly more well-financed, slightly maybe a more proven business model. And there's certain characteristics that I'd be able to kind of just say no or yes, whether I'm interested in a job quite early. I think the 5 boxes that I think about like as an investment of time comes a bit later.
Yeah, no, that's really interesting. You started as a young nipper, as a footballer. How on earth did you get into finance? So why finance from football, I suppose?
It wasn't planned. So I think for those of people who don't know my background, I left school. When I was young, I always dreamed of being a professional footballer. That was my passion. That came at the expense of many things like homework and other things that I probably should have been doing when I was younger. But I left school at 16 after my GCSEs, and I went to play professional football for Peterborough United. And I spent about 5 years playing football full time. And for one reason or another, when I was 21, it wasn't going to work out, and I was going to join a part-time team. So still semi-professional, but not taking up all of my days. So at that point, I went to do lots of different jobs, from washing dishes in a pub to delivering beer to different pubs in the area. And at that point, funny enough, my brother-in-law had been through a similar journey as a pro rugby player. And he kind of got a hold of me one day at a family event and just said to me, look, you've got to get yourself back to college, mate. Get yourself to uni and get some qualifications. And And it was at about the same time that I was struggling to find anything that I really wanted to do. So I listened to him. I went to night school at Cambridge Regional College and had a 1-year accelerator course that would allow me to get into uni. I then picked a uni based on where I'd like to live. So at that point, being a CFO was definitely not top of my priority list. So I picked business studies because I didn't know what I wanted to do. And I thought, if I do business studies, surely I'll find something to do out of that long list of topics.
Clues in the name, you're thinking, right?
Exactly. So I moved down to Bournemouth, of which further distractions came. And in the end, the things that I really liked were strategy, corporate finance, and other finance modules as well. But I liked the kind of logic from being able to work stuff out, being able to assess stuff, thinking about winning and losing as a strategy, as a person who's influencing a company. They resonated with my personality, my background in competitive sport, that they were the topics that I enjoyed. So as I spent more and more time on those, it just became clear that actually CFO was a good route in to be in the boardroom and having those discussions using my kind of natural academic sweet spot of being maybe more analytical rather than creative in nature. So I think it wasn't ever by design at the start. It was more through a process of seeing what I like and just going to that next stage in life all the time and seeing which things I like and then pursuing them and exploring it. When I look back, actually, I've read a lot of books recently on design thinking, and it has a lot of similarities with that approach in terms of just trying to explore and not having to put too much of a framework around things before you start something.
Yeah, no. You obviously had, an incredible career at Channel 4, really. How did you build that career? It had many, many different roles and promotions, but fundamentally, kind of how did you build that?
It's a hard question to answer. I was there for over 10 years. I think I was really fortunate to work with some great people. I followed my interest, Andrew. I think it didn't feel like hard work at the time because I was naturally getting involved with cool stuff that I enjoyed, right? So I wouldn't say that there was anything in particular that I could say. I think it's follow the things you're interested in because you have to have that inbuilt motivation and work really hard and prove yourself. I think I turned up at Channel 4 every day with that attitude of I want to prove myself, and the sort of almost competitiveness inside of me wanted to get involved in new things and try new stuff. And I was particularly interested in new growth and venture activities. And being involved in those things in a big corporate often puts you in situations that you wouldn't be in if you were looking after maybe the biggest revenue number. And I learned a lot working on the new emerging technologies and new emerging business lines because I had a lot more autonomy, and you almost became the domain expert for something that became very important as part of that business when it became much bigger. So you kind of grow with the business units you're working with.
Is it a combination of where your key strengths laid and your interests? It was just kind of a combination of those two things. Your career could go where your natural key strengths were and your interests were, which then increased your ratios of doing really good work, basically.
Yeah, I think you have to have that kind of underlying work ethic of hard work, wanting to get on and be a team player, wanting to be collaborative and help people achieve things as a group, because in any organization, all of those things are absolutely vital. And then I think the underlying passions come out because all those things I said I liked at uni, like strategy, corporate finance, I found those niches in Channel 4. So the investment into new ventures, working with the business development and corporate development teams, adding some skills that they might find helpful. I found a good partnership there that was really my kind of learning base, working with those types of people, which was really valuable.
Just talk us through your last role at Channel 4, what you were responsible for from the fund and also the core role.
Yes, I kind of had a split role at the end at Channel 4. So on the one hand, I was managing a commercial finance team that covered about 1.2 billion a year in income and about 300 million a year in terms of cost base and technology investment. And my role there was as a divisional CFO, really, for commercial finance. So I reported to the CFO, but I really partnered up with the chief commercial officer and chief strategy officer and chief legal officer, and worked with those individuals on anything really, from basic FP&A to decision making. And I think my time split was probably 20% on FP&A type activities and 80% on working with them on decision making, contracts, investments, business plans. So that was kind of half my role. And then the other half was spent trying to help Channel 4 grow its investment activity. So I worked with two funds. One I co-founded, and one I ended up running for the last 12 months at Channel 4. And in those funds, there was probably about 25 investments into companies between the stages of Series A through to probably Series C, D. And the total value of Channel 4's investments in those companies was around 50 million.
Was it at that stage you think that you knew that you wanted to work in one of those portfolio businesses, or was it earlier, or was it then?
Yeah, no, I think that really gave me some good insight. So I sat on the board of 3 different companies as well, ranging between kind of 5 million turnover and up to about 35 million turnover. So I was a non-exec or a board observer for those 3 companies. So that gave me an insight into smaller business management, plus the fund management was meaning I was looking at really interesting business plans all the time and meeting founders and founding teams as they were pitching investment to us. And, through that process, I worked on Channel 4's investment in Pinterest, their investments in companies like Readly, Eve Mattresses, who have all gone through an IPO since Channel 4 invested. And it gave me the bug to get involved in that kind of environment. And I think the other thing at Channel 4 was that I spent some time, I was really fortunate, and they sponsored me on an emerging CFO program at Stanford University in California. So I spent a lot of time out in California as part of that program. And I had a lot of people on my course that were working with scale-ups in the US. And I actually spent some time on my trips out there going to visit those companies. So I actually went to visit Zynga Games in San Francisco. I went to visit Pinterest because we were an investor, and I spent some time with their finance teams. So I was building up this kind of natural interest in startups, scale-ups, through a really unusual route.
There's a level of commitment that you've put in that is above the norm, in terms of, you weren't having cocktails on the beach. You were going to see finance teams in Pinterest. I mean, that I question that personally, but what is that? Why?
I think I do both. I think I probably over-index on work, definitely. But I'm interested in it, so I think it's almost like a hobby.
Okay, I understand.
There's, if you think about stuff I've read recently that I really enjoy, I've read the Robert Iger biography, the Disney CEO, that was brilliant. I loved it because of all the M&A strategy with them buying Pixar and Lucasfilms. I read Shoe Dog about the Nike founder, which again was a brilliant story of entrepreneurship, grit and determination. And I enjoyed those things. Their books, I'd rather read that than a storybook. And I think that kind of explains how my mind works a little bit, yeah. But I definitely like a cocktail, so don't...
obviously you've your commitment and your interests and over delivering in your roles at Channel 4 have secured you really good jobs. But come on, what is the hidden magic dust that's kind of helped you navigate such a good career in a corporate?
it's really hard to say. I'm definitely not a fan of like playing politics, and I think that eventually that catches up with you. So I'd like to think I got to where I got to by some of the things that you've described: hard work, a natural interest for the areas that you want to work in, because you need to be motivated and you need to enjoy it, especially over a long period of time. I think the other thing that I always encourage people that I'm working with who might be going through a similar stage to I was is, I think you've also got to put your hand up sometimes and shout for stuff. I think maybe it's the footballer mentality, but I think I was good at asking for opportunities, or where I saw gaps, saying, I'd love to work on that. Can I put my hand up and could you give me that project? And there was plenty of situations at Channel 4 where I got given good projects to work on, that people could, the people making those decisions could quite easily have hired a more experienced person to do that. And I think that enthusiasm and the fact that you asked and put in a position where they make a decision, I think helped get some good projects coming my way as well. So I would really encourage people not to think about it like, almost don't worry what everyone else is doing. You're always going to have other people that could have the same jobs as you. And it's the same, when I'm going for jobs now, there's a whole world of really good CFOs out there, and I can't control that, but I can control what I do. And I think it's the same when you're in a big corporate and you're trying to progress. I think control what you can do and almost don't worry about everyone else, because they'll have their own things going on. But you can definitely put your hand up, get involved with things, take a really proactive approach to thinking about the types of projects you want to get involved with, volunteering, and being really, really proactive about it.
I think that proactivity, and then when you give an opportunity, delivering on it, and then when you're proactive again, there's maybe a little bit of concern the first time. Or I'm taking a bit of a risk here with Matt, but he really wants to do it. Let's try him on this project. You deliver on that, and then when you show proactivity again, the project can be a bit bigger, right? And you're a bit more comfortable with it not being a risk anymore. Yeah,
and I think when you go into those projects that might be stretch projects, know where you're weak and strong, and know where your gaps are, and try and build support to help you. No one's ever going to look down on you for that. I think it shows maturity as a leader that you can say, right, I'm going into this big project and I know I've got a bit of a weak area here. How can I put a team around me for this big project that means we're all successful?
Right, we'll zoom forward to you've landed Festicket CFO role. How were the first few months? Was it what you expected?
No, I'd say it was way harder. I had to write on a piece of paper, make decisions and get on with it. And I had that piece of paper sitting on my desk because I found that when I first started, everyone was coming with asking me loads of stuff. And it was very different to being at a corporate. So at a corporate, we would typically write a paper, present that paper to a senior committee, debate that paper, maybe then go away and iterate that paper, go back, debate it again, and then maybe make a decision. Whereas people were coming to me and saying, Matt, can I do this? Can I spend this 100K? I'm doing, and you almost had to do the opposite and say, right, hang on a minute. I'm not going to have that same information. It's a different pace. I'm going to have to come up with a different process for making decisions around what's important, what's most vital for the company, and think about how I spend my time. So it was a big, big culture shock, I'd say, in terms of that first 3 to 6 months. And one, again, you can prepare for mentally, I think. I think it was fun. Don't get me wrong, it was a lot of fun, but it was very different.
Was there anything that you'd done in advance of joining that helped?
Yeah, definitely. I mean, I'd been all over their business plan, so I was aware of the business model very well. I'd spent a lot of time before I started with founders and built good relationships with them and knew the business well, knew what they were thinking. The 90-day plan, again, the preparation from that was really valuable. I'd seen lots of CFOs, had been through the similar path, and had given me some tips and pointers to look out for. And again, it comes back to the preparation phase, right? You have, if you prepare for these things well, you've got a higher chance of succeeding, in my view.
Is there anything that you have to change in your plan?
Yeah, definitely. I think being in a scale up, you're changing plans all the time. And, you know, I think when I delivered, like a couple of months in, I delivered kind of like a finance roadmap. And I think when I look back at that initial finance roadmap, we had to reprioritize different things that needed support from other areas. We had to reprioritize depending on what's happening in business. But it was still a really valuable exercise because at least I knew what that roadmap should look like in an ideal situation. But in the startup and scale up world, you're often not in an ideal situation.
Was Zach like he was at interview when you started? Zach's the founder, and were the other senior leadership team that you interviewed with exactly what you expected when you joined, and how did you try and build credibility with those people?
Yeah, I was really lucky. Zach had just hired out. I was like the last hire in terms of senior leadership team. And I was really lucky because I genuinely liked the group. You know, we used to go for a drink together and go for lunches together. You know, we sort of, we formed a nice friendship group that was a good support network in terms of like the CMO, CTO, COO, Chief Commercial Officer as well. So we had a good like group of us. And I sort of enjoyed working with them, which was helpful. I think in terms of like Zach and Jonathan, who were the two founders, yeah, they were quite like they came across in the interview process, I think, and I spent loads of time with them early on because I went straight into a fundraise process. So Zach, Jonathan, and I, in my first 3 months, had been to Milan together, to San Francisco together, and to New York together. So on the road, you get to know each other pretty quickly, pretty well. Because we'd always make sure we go out for dinner together in the evenings on those trips. And, you know, I'd say, yeah, it was a fair reflection of how they came across in the process.
Were those dinners in the evening and lunchtimes, was it just talking about Festicket?
Not always, no. I'd say that definitely as founders, their natural interest is in the company that they started. I think that they over-index versus a corporate. I think in a corporate, there's a bit more chat around family life and it's generally a slightly slower pace and a different kind of conversation, I think. And I think when I look back at Channel 4 and, you know, some of the things that happened there, like I had my first 2 kids when I was at Channel 4. And when I think about the support network around me and the nice things that people did for me when those life events happened, I think it's different in tone to a startup where it's so intensely focused on what you're trying to achieve in terms of outcomes that I feel it over-indexes slightly, but then that might just be my personal experience. I've only got kind of one comparison, so other people might find it slightly different.
I think it was 2019, but maybe 2018 as well. You're in the top 10 of the fastest growing businesses in the UK. How did you prioritize the scale up from your perspective in the CFO role?
Yeah, so we had I think you've got to work hard on the investment opportunities. And it comes back to that phrase that I used earlier, money in, money out. And personally, I think in a scale up as a CFO, that's the thing you need your finger on the pulse on. You need to know what the levers are to drive growth. And if things are not working, you need to redivert investment pretty quickly to get them working. And I think for me, that was the biggest thing, right? I really got to understand the business model very quickly, the levers we had to grow, and I could predict our trajectory. And therefore, we could have more strategic debates about how we overcome future challenges by spotting and understanding those things early. And, you know, at Festicket, we've made some huge changes to the business model. When I first joined, we were a marketplace and we were selling, you know, packages basically for music festivals and a few tickets. And I'd say that probably 85% of the orders were coming off Festicket's audience, and it was all about Festicket as a brand. If you fast forward to today, we've totally re-engineered the business to be actually more of a B2B SaaS platform. And it's the complete opposite. So today, about 85% of our revenues come from SaaS tools that we give to event organizers that we generate revenues on. And that whole process has been part of the scale-up journey, making those decisions and making those investment choices as we've gone through the last 3 years. So I think it's all about understanding that relationship between investment and return. And that's the line that you're always trying to have your finger on the pulse as a CFO.
And on the investor piece, obviously the VC involvement, how did that work through that period of the scale up?
Yeah, good. I think we've got great relationships with our investors. That Festiqit as a business is owned about 70% by venture capitalists and individuals, high net worths. And I really like working with investors. I think VCs sometimes get a bad name in certain circles, but I think for me, I think investors are quite predictable in what they want. And as a stakeholder, that's a good thing, right? So I know that investors in Festiqit want to make a financial return. And I know roughly the time period they want to make that return on, and roughly what's good for them in terms of how big a return they make. So as a stakeholder, I know whether they're going to be happy or not happy, depending on the results of the business and where we are. And I think I've got a really good relationship with all of the venture capitalists we work with. And I think understanding them and having run a fund before helps, because I've been in that position where I'm managing a portfolio of investments. But I think the VC relationship's good, but you've got to try and understand the VC environment and what they want, definitely, because it's very different to other types of investment class.
How involved were they in where you were spending the money?
I'd say it evolved a lot more. Going from when I first joined, I'd say the business was still in startup mode. And then I'd say that I joined literally at the scale up moment because we raised our Series D. We raised about $15 million and brought on 2 new lead investors. So within 9 months of me joining, we'd had a capital injection of 15 million into the business. We had a totally restructured board with a new chairman, 2 new lead investors on the board, and a totally new operating structure. And that new operating structure and that scale-up phase meant there was a lot more scrutiny around our investment decisions. It became bigger, the bet became bigger. You can't go through too many of those 15 million rounds without increasing your valuation. The maths don't work. So the level of scrutiny on getting that return and performance evolves as you go through the scale-up side of things. And the other crucial thing is it no longer becomes just about headline growth. You've got to start delivering and optimizing the underlying model and seeing that path to profitability. And I think that's what we saw. Headline growth, which was kind of the previous key metric, wasn't good enough for the scale-up phase for us. We had to start engineering our unit economics and thinking about tough choices to almost turn some growth away because it wasn't profitable growth, and trying then to replace that with more profitable streams, hence our move to B2B in the end at Festiqit.
And challenges to scale, what were some of the kind of main pain points that you encountered?
Shifting business models and having to make decisions to go in different directions. I think when you're a business, Festiqit was doing about 50 million a year in bookings when I first joined. And to get to 100, 150, which is roughly where we're at now, you've got to make decisions around what you prioritize in terms of markets, products. And we went through a big process of finding out what was right for us and what was right for the business. I think there's also tough decisions to be made around historical things that the company's done that it might have thought were successful, but actually with the new way of looking at things through that scale-up phase, there were certain things that we had to walk away from that actually had got the company to that point, but they weren't scalable. And I think there was lots of tough decisions that we went through.
Is there anything you would have done sooner to make the scale up more successful or differently?
No, because I think that time period that we took to make certain decisions probably helped us make it with more conviction. And then when we were to make bets on the strategy that we wanted to do, we were really sure about it, and we could make bold ones like M&A decisions. I think in terms of like finance systems as a CFO, so if you come away from kind of company strategy and scale up, I would say that, you know, as a finance department, you know, we definitely would have preferred to improve our data flows and systems much earlier. You know, there's no doubt about that. I think, you know, we went through a period where we were growing at about 40% a year. The finance systems were fine. The processes were okay. We could report by, say, day 15. And then we bought two companies, and the synergistic benefits of those two companies exploded. So we were growing at nearly 200% a year. And the integration of two companies into Festicket's accounts, plus the growth at 200% on a high volume business, it broke us as a team. And, you know, we couldn't have foreseen the impact that would have had. But if I could go back with that knowledge now, I definitely would have addressed some of those more structural scale type problems earlier at Festicket.
23rd of March, 2020.
Yeah.
Things obviously changed reasonably significantly. Was the business expecting it? Were you expecting it? What was the plan?
I think only Bill Gates was expecting it. I think, you know, I think as finance leaders, we're always working on scenarios, right? And I think quite often we're the person in the room that is saying, well, this could happen. We should have a plan for this. And most other leaders in the room are like, that won't happen. Just don't worry about it. And I think the way that we always worked at Festicket was when we had a budget approved, we always recognized that we were a business going through extreme growth with a lot of volatility. So we always took like an agile budget. So we had a base budget, and then we had, you know, an optimistic case and a more pessimistic case. And we had different gates to release investment as we went throughout the year. So like on a quarterly basis, we'd put more money in to the engine, more gas into the engine, if things looked like they were on the right trajectory and working. Or if they weren't, we'd come back to a decision point with our board to talk about the corrective measures and whether it was right still to invest or pause and fix and then invest. So I think, you know, our natural approach of having that agile mindset with clear gates around investment decisions helped us. But we'd never had anything that was even remotely close to the scenario that we faced ourselves after that day. You know, we were flying as a company. We delivered over 200% growth across the first 10 weeks of the year. And after that date that you mentioned, we found ourselves, you know, we found our revenue drop off by 95%. So it was way more extreme and way more significant than any of the kind of the traditional budgeting scenario planning could have accounted for.
I mean, what were the emotions and feelings in those first 3 months?
I didn't really have much time for emotions and feelings, to be honest. I think it was such an intense period that I had to react and come up with a plan, not just for finance, but for the company to survive. You know, we took a very structured approach with our board. We initiated a project called Project Boomerang. And what we did was that we established some macro scenarios, and, you know, I'm definitely not afraid to say that we leveraged other people who were doing that work. So I found at the time that the McKinsey articles were particularly good. And I really liked how they were running all different scenarios around restrictions and when the pandemic might end. So we used kind of like the McKinsey input, and then we applied that to our industry to create a range of scenarios and outcomes that then we could plan cash burn and plan different scenarios. So we came back to a very similar process to how we manage the finances around scenario planning, gates, and and working through that as we go through and changing plans regularly. And that's how we responded. So I didn't really have, I would say that I didn't feel particularly emotional at the time. I was in business mode, trying to come up with a plan to keep as many jobs as we could, and to preserve the business.
I'm assuming the CEO CFO relationship was harder.
Yeah, it was. We got to a place with our board that I think we've managed it really well with our investors and boards, between myself and the CEO. It definitely is harder because you're having to have really tough conversations about how many heads to let go, how many people to put on furlough, when the rebound's going to happen. And I think you get that natural gap in underlying thought processes between the CEO probably being more of an optimist and the CFO being a bit more of a pessimist. I think I'm an optimistic CFO, but I'm still more of a pessimist than our CEO.
Yeah, of course.
And you get this gap. You get this gap of realism that you've got so much cash, and if one person thinks that something's going to improve on a certain day and someone else thinks they're going to improve on a different day, you have to work through that together. You have to come up with that. You need to go into that board meeting and speak to your investors that shows both of you are totally aligned. So there's a lot of stuff that goes on kind of behind closed doors where you're debating, you're analysing, and you get to that point where you're going to investors and your board with a united front, and having worked through any differences of opinion before you get there.
You hadn't really worked in a negative growth environment.
Yeah, I was thinking about this, So there was a couple of situations at Channel 4. So we had the downturn, obviously, the global financial crisis, but I was relatively early in my career then. So I remember it going on. I remember the consequences of redundancies, but I wouldn't say that I was involved in the planning and the execution of the plans around that. I think I was too on the edge of the decision-making process. One we did have was when the Brexit got approved, and at Channel 4, the ad markets completely tanked after that decision. So we had planned for it to be a no vote, and when it was a yes vote, about 100 million came off the forecast for the year. So we had a big kind of shock then, but to put it into context, it was helpful in this process because of the way that we responded at Channel 4 and thought about scenarios and gates. The quantum, though, was much bigger at Festickit. So I hadn't been through anything anywhere near as large as this.
And obviously we had some conversations during that time, and I don't quite know how you had time to talk to me, to be honest. And maybe you were offended that I did call you during that time. But you were talking through, having to renegotiate, new investment with VCs, and obviously the valuation and all of those points have changed. How did you approach that? Because obviously it was essential to keep the business going. But you're in such a tricky balance there. You're in between a CEO founder who wants to keep hold of his equity. You've got investors that have invested a bit like dot-com boom, where their valuation has just plummeted, but you still need more capital. So, what on earth? Yeah, how did you approach that?
Yes, for those people who don't know, we closed a round during the pandemic, and I guess it's something I'm quite proud of as a CFO of a live entertainment business when live events couldn't happen, to have raised VC money at that point. But in terms of how we went about it, so relationships being strong, absolutely important. Before you go into that, our VCs trusted us as a management team, and they knew that if we had a strong plan that minimized the damage during the downturn, they believed in us as a management team to return investment on the upturn. So I think the backing came from that trust and respect that we had, and the trajectory that the business had before the pandemic kicked off. So when we were negotiating, there was, of course, tough negotiations to have. There's lots at stake, and those negotiations are never easy. But we were all starting from a point of we were debating how long this would last and when the rebound would come and when would that growth trajectory pick back up, not if it would. And I think when you have that trust with your investors that they believe in the business and believe in the management team, I think you're all starting from the same belief point, and that helps massively when you're trying to negotiate VC investment in tricky times.
I'm conscious that you've got a 12 and other people have got a 12. You're on to pastures new, so talk us about the new role and kind of what you're excited about.
Yeah, so I'm off. I'm starting a business called Thriver Health in June, and for those of you who hadn't heard about the company, Thriver is a business that sends you to your home a finger prick blood test, and then you send your results direct to the lab, and then you basically get a dashboard telling you what's going on inside your body. So it's a business that's basically trying to encourage preventative healthcare, giving you deeper insights about what's happening inside your body so you can live more good years basically during your life and take more corrective measures about things that are happening in your body before you know about them and before you see symptoms.
As Series B, is it?
Yeah, exactly. So they're at Series B stage. They've been growing really quickly, as you can imagine, during the pandemic. They've been helping out on a lot of the COVID remote testing. So yeah, I'm super excited about that. I had a look. I'm definitely going to give it a go because it's the website's, it catches your attention actually with the tests and things, doesn't it? It's quite an interesting one, so I'll definitely give it a go. Look, if you've got any other questions, send them through to me and I will put them to Matt at another time, but conscious that it's 12. But thank you Matt for taking time out. It was always good to catch up, and thank you to everyone that could make the call, and yeah, look forward to seeing you all again soon. Thanks, Andrew. I hope everyone found it helpful. And again, like as Andrew said, if anyone has any questions or wants to follow up, feel free.
Yeah,
thank you so much.
Thanks, Dan. See you later, guys.
Thank you.
Thanks, folks.
Thanks, Matt.